Tonight, New York State's Attorney General Letitia James saying she's prepared to seize Donald Trump's assets, including his buildings, if he doesn't pay the money. ABC's Aaron Katersky one-on-one tonight with the Attorney General.
4 days after a judge ordered Donald Trump to pay $355 million for a decade of fraud, New York Attorney General Letitia James says she's prepared to do everything she can to make sure the former president pays his fine, including, she told us, seizing the buildings that bear his name.
If he does not have funds to pay off the judgment, then we will seek, judgment enforcement mechanisms in court, and we will ask the judge to seize his assets.
Now, here's the thing. Trump was found liable for inflating his wealth and exaggerating his real estate values to secure better terms from banks on low-interest loans. And Trump claims that the banks enjoy doing business with him. That is his position. But there is a significant gap between what Trump has been saying about his finances and what the courts, banks, and prosecutors have found when they examine the actual records.
Donald Trump liable for fraud. In a New York court on Tuesday, the judgment rang loud and scathing. The former US president and his company were found to have deceived banks and insurers by illegally overvaluing his properties and other assets.
But this is by far the biggest repudiation of Donald Trump's image as a wealthy businessman and the steps that the court has said he took that were illegal in building that image of a wealthy and successful businessman. An image.
Judge Arthur Engeron in this New York civil fraud case determined that Trump had been systematically misrepresenting the value of his assets over the years. He was telling banks his properties were worth significantly more than they actually were to secure better terms on loans and insurance. This is not just some small accounting error. This is a serious judicial finding that the figures Trump presented to financial institutions were substantially inaccurate.
The Trump legal team said that he cannot secure a $464 million bond as he appeals a civil fraud judgment in New York. The case centered on whether the former president inflated his personal wealth, his property value, to obtain more favorable loans. In new court filings, Trump attorneys revealed Trump had gone to 30 different companies. None would play ball.
Maybe start with the bond. He has to pay a reduced bond, $175 million, and that is down from $450 million. So that happened earlier in the week. It seems like weeks ago. So let us look at what is really going on here. And I want to make sure I keep things clear for you. The situation we are discussing is all about documented legal findings and investigative reporting that, when you piece them together, tell a pretty specific story. First off, Judge Engeron made key legal findings in court which showed that Trump was inflating the value of his assets. That is not just some opinion.
President Trump also tonight says he has not spoken with the J.P. Morgan CEO since that $5 billion lawsuit he filed for the bank closing his accounts. J.P. Morgan did that after what we're talking about here, the deadly January 6th attack on the Capitol. The president says he was debanked for political reasons, and that's why he's suing, with the lawsuit accusing the bank of having unsubstantiated woke beliefs, as the suit puts it, about the president's views, and that it was because, quote, the political tide at the moment favored doing so.
This is all part of the court records. Now, J.P. Morgan Chase also plays into this story, confirming in their court filings that they closed over 50 Trump-related accounts after January 6th. That is documented in filings from credible sources, so it is solid information. Across various legal proceedings, there has been a consistent pattern of discrepancies between what is publicly claimed about Trump's wealth and the actual financial situation. And it is all part of the evidence collected.
Well, Attorney General Letitia James says the property right here behind me is on her radar. It is 40 Wall Street. It is a Donald Trump property. And she says if Trump does not pay his $354 million judgment, she might be coming for it. Last week, former President Trump was slapped with a $354 million judgment, plus interest that compounds every day in his civil fraud case in New York.
When we talk about the examination of accounts, what that really means is that there is a legal process in place for courts to look into financial records that go deeper than just public statements. And what has been uncovered through those legal processes tends to show a much different reality than the image Trump presents. It is all real, and the findings are all documented. Together, they paint a picture that we are going to examine here. So let us start at the beginning of this financial reality story, which begins with a key finding from the legal case involving Trump.
Tonight, the pressure growing on Donald Trump as New York Attorney General Letitia James takes the first step towards seizing some of his assets if he can't meet Monday's deadline to post his $464 million bond. James filing documents to lay the groundwork to take over his golf course in a large estate in Westchester County. Trump's lawyers say he faces insurmountable difficulties in obtaining a bond. 30 insurance companies have turned him down because he doesn't have enough cash, and they won't accept his properties as collateral. Trump says the Attorney General is trying to force him to sell his real estate at fire sale prices. And if and when I win the appeal, they would be gone.
After a thorough civil fraud trial, Judge Engoron determined that Trump was consistently inflating the values he reported for his properties in the financial statements he gave to banks and insurers. A couple of significant examples came out during the trial. Take Trump Tower, for instance. In financial documents, that residential triplex apartment was presented as being about 3 times bigger than it actually is, which resulted in a valuation that was significantly overstated compared to what it should have been. And then there is Mar-a-Lago, which ties into this whole pattern of inflated valuations. It turns out that the property values Trump was citing were far more than what independent assessment suggested they were worth. Take the Seven Springs estate in New York, for instance. Valuations reported in financial statements were significantly higher than what credible independent assessments supported.
Does he have the money to pay this?
That's really not my business. If he does not have funds to pay off the judgment, then we will seek judgment enforcement mechanisms in court, and we will ask the judge to seize his assets.
We were sitting right across the street from one of those assets, Trump's 40 Wall Street.
There's a building right just out the window.
Yes, I look at 40 Wall Street each and every day.
So 40 Wall Street, the apartment here at Trump Tower, all potential targets. If Trump cannot post a bond by the deadline of Monday, it's not like state officials are going to close down these buildings, but David, they could move to file liens to start to claim ownership.
This was not just a one-off situation. Across several properties in multiple years, the same pattern was clear. The numbers Trump shared with lenders and insurers were significantly inflated when compared to what independent appraisers and market analysis would support. Judge Engoron looked at this pattern and determined it was not just a mistake. It was a systematic approach to inflate values for financial gain. Because of this approach, Trump was able to secure better terms on loans and more favorable rates on insurance that he would never have received if he had presented accurate valuations. Essentially, this is where the findings of systematic fraud for financial benefit come into play. And the discrepancy between his overstated numbers and the actual figures documented in court is a key part of the story. Then there is the JP Morgan angle. The bank decided to close over 50 accounts linked to Trump after January 6th, which is not just about making a statement. This is a serious financial decision made by a major institution that, after years of working with Trump, determined that the relationship carried more risk than it was worth. Banks usually assess this kind of risk based on a client's financial health, adherence to regulations, reputation, and patterns in account activity and financial disclosures. We are not talking about a small institution here. JP Morgan is the largest bank in the United States with sophisticated risk management. When they looked at the accounts tied to Trump, they were evaluating everything they had seen in those records over the years. Their decision to close all those accounts is itself a significant statement. The bank that had the clearest view of the actual numbers decided those numbers were too risky to continue being associated with. Now let us look deeper at what all of this really reveals. There are some important connections between the story of financial reality and political considerations, security questions, and what all this means for 2026. When it comes to the examination of accounts, this situation is significant, much larger than just one enforcement action might suggest. First off, let us look at the inflation versus deflation aspect. This is a well-documented pattern in Trump's financial history, and it creates significant legal issues across several jurisdictions at once. The civil fraud case highlighted how Trump inflated his asset values to lenders and insurers to secure more favorable loan terms. However, there is another side to this story that has been reported, which brings its own set of legal concerns. Lenders receive one set of financial documents, while tax authorities may receive another. For lenders, the goal is to show the highest possible asset values because that allows for larger loans with better rates. On the other side, when dealing with tax authorities, presenting lower asset values reduces property tax obligations. So the same property that appears to be valued at a high figure on a financial statement presented to a bank can be valued quite differently money in documents submitted to tax authorities. Then we have the complexities of Trump's business structure, which complicates matters further. The way his business empire is organized, it can sometimes make it difficult to see the full financial picture. And that is precisely what legal enforcement aims to uncover. When courts examine that structure, they often find significant and potentially troubling information. Next is how lenders and partners will react once the records come to light through court proceedings. This could significantly affect Trump's financial relationships. There are also questions about foreign financial connections. Financial records that track the flow of money can open up conversations about foreign financial ties that have been part of discussions about his political career. Finally, there is the issue of his political narrative. The story of a self-funded billionaire who cannot be influenced starts to weaken when court-supervised access to actual accounts shows a financial reality that is substantially different from what he has been presenting. So let us examine each of these dimensions more closely, starting with that inflation versus deflation issue since it creates some of the most direct legal exposure. The whole situation involves the network of limited liability companies that Trump's business empire is built on. There are many separate entities, each able to hold assets and conduct transactions. Now, let me be clear. This kind of corporate structure is not inherently illegal. Many business people use similar arrangements for legitimate business and tax purposes. However, it creates a level of complexity that makes tracking money flows more challenging. It raises questions about where the money comes from and whether transactions between affiliated entities are straightforward or whether they serve to obscure the actual financial situation. When investigators and courts get access to the complete financial records, including the deeper layers of the company structure, not just the more visible entities, it reveals a fuller picture than those public documents ever could. What might look like standard business transactions on the surface can take on a different meaning once you have the full context. This is where Judge Engoron's findings fit in, showing how the numbers in different situations can tell very different stories. They reveal discrepancies in the actual records that are far more informative than any public statements. It is this access to comprehensive records that demonstrates the potential for financial misrepresentation in multiple directions, whether it is lenders being misled or tax authorities receiving different figures. And that is exactly the kind of finding that shifts the entire financial narrative significantly. We are not just looking at surface-level information anymore. We are examining how funds are moved around and suddenly everything looks different. Now let me look at how lenders and partners are reacting. It is important to understand what becomes clear when Trump's financial dealings are examined through court records. The visibility of those accounts can significantly change the dynamics of his financial relationships. Lenders usually rely heavily on the financial information provided by borrowers, and trust in that information is the foundation of their partnerships. During the civil fraud trial, it came to light that Trump had been inflating asset values on documents sent to lenders. That meant every lender reviewing that evidence had to reassess whether the information they had previously received reflected the same misleading pattern. Deutsche Bank, Trump's main lender after many others had already ended their relationships, was already stepping back from the relationship by the time the trial concluded. What those trial documents did was give every lender, current or potential, a court-backed reason to question the financial details they had been provided, which is not a typical situation in business lending. This process of judicial findings showing persistent financial misrepresentation results in ongoing difficulty in financial relationships. With each new court ruling, lenders become increasingly cautious, and every development from enforcement actions creates additional concern among partners. The ongoing situation with various court cases, each providing access to financial records, creates pressure on the financial relationships that Trump's business depends on from multiple directions. Now let us address the aspect of foreign financial connections. This is where the story about financial enforcement intersects with questions that have followed Trump throughout his political career and become particularly relevant given his current decisions regarding Iran. The financial records that document the flow of money through the entity structure include transfers involving foreign connections, and that adds another dimension to the overall picture. There are many elements coming together that raise questions about Trump's foreign financial relationships, which have been part of public discussion since his first term. The investigation by Jack Smith indicates that prosecutors believe Trump retained classified documents that are connected to his business interests. This raises questions about how his financial interests might intersect with national security considerations. If account records reveal connections to foreign entities that have a stake in the policies he is making, like those affected by the ongoing situation in Iran or trade decisions, it makes the concerns about financial conflicts more concrete. We are not just talking hypothetically. Smith's findings point to a real concern about whether a president's financial position might make him susceptible to outside influence. Those records that document these connections are significant. They could change the perception of his policy decisions considerably. And then there is the political dimension. The image of him as a self-funded billionaire, someone who cannot be influenced by financial interests, is not just a claim he makes. It forms the foundation of why his supporters believe he is independent of financial pressures and why they trust his policies reflect the interests of the American people rather than his own financial gain. But if those account records tell a different story, showing a complex financial structure that depends on certain relationships and reveals discrepancies between his claimed wealth and the actual reality, that is when the political argument becomes much harder to maintain. It could undermine that carefully constructed image, raising questions about whether his decisions are based on what is best for the public rather than what is best for his own financial situation. It is quite significant what the court has uncovered about Trump's financial situation. The court examined his actual financial records and found some significant discrepancies that change our understanding. Let us summarize a few key points because this is important context. First, there is the finding that during the court proceedings, they discovered Trump had consistently inflated the values of his assets when dealing with lenders and insurers. This was not just a claim or a politically motivated allegation. It was a conclusion reached after a thorough civil fraud trial overseen by Judge Engoron. Trump's legal team had every opportunity to challenge this evidence, but ultimately it became part of the official record. So it is now documented that the wealth he presented to banks was not accurately represented. And that discrepancy is backed by the court's findings. Next, we have the issue of how Trump's business is organized. The structure he uses includes layers of business entities that make it more difficult to track where money is actually flowing. The courts have now been granted access to examine that structure and determine what is actually happening beneath the surface. This enforcement access allows a much clearer view than any public financial statement could provide. It shows how transactions flow between various affiliated companies and how revenues and expenses are managed through a network of limited liability companies. Investigators often find these complex structures serve purposes beyond straightforward business organization. And this is exactly the kind of finding that changes our understanding of the overall financial situation. And then we have to consider how lenders and partners respond to this level of judicial examination. With the court now having access to financial records, we are looking at a significant change in how everything operates. JP Morgan decided to close more than 50 accounts following January 6th, which adds to the overall picture. This creates a pattern where financial relationships are under increasing pressure. Every new finding in court makes lenders more cautious about the financial information coming from Trump-related businesses. Then there are the concerns that partners have about being associated with those businesses. The more enforcement actions that are happening simultaneously, each providing access to different financial records, the more pressure there is on the relationships that keep the financial model functioning. Now let us address the political consequences. Having access to these financial records reveals a reality that differs significantly from the image of a self-made, untouchable billionaire. This is an important aspect of why the examination of these financial records matters. It is not just about Trump's personal image. It raises questions about the foundation of the belief that his decisions are made for the public good rather than for his own financial benefit. If it turns out that the financial records show a complex structure that relies on certain foreign financial connections, that raises real questions about the independence of his policy choices. When discrepancies emerge between what has been officially stated and what the documents show, it makes the core argument more difficult to sustain. This is not just a political disagreement. We are talking about documented evidence in financial records, actual account histories, and actual money flows, things that cannot be addressed through public relations efforts. The court has examined the accounts, and what was found is now part of the official record. That record has the potential to change the way people understand the relationship between financial reality and the claims of independence and untouchable success.